Good morning, all. Camelback Trading 2724 and the Pit Futures Trading.com coming to you this Wednesday morning, March 4th. We're looking at partial days of the SPY ETF here on the market profile on Window Trader. I'm in 10 tick increments. I would have to put it in 20 to get the whole day, and I'm basically showing you yesterday's value areas, what we're encompassing. Now, I just want to talk a little bit about what transpired last night during Super Tuesday. Not to be political, but because I think it's very important for the markets and how I see it versus how right now the market's seeing it. So obviously, with Biden winning pretty decisively last night, the market's breathing a bit of a sigh of relief as we're up $5. We were up over $7 in the SPY this morning. Now, I get it. I get the market would be very nervous if Sanders is the nominee. But I think the odds of Sanders beating Trump would be slim and none because most Democrats are still pretty moderate, and even they think he's over the top. So I think Sanders winning in November would be slim and none. However, if Biden is their nominee, which right now it looks more and more like he will, well, the odds of him beating Trump are a lot better, right? Most Democrats, if not all, will vote for him, right? Okay, we're going to go back to Obama's policies. But here's my question as a trader. Who would the market rather have as president? Trump or Biden? And the answer to that, I think, is Trump. So I think this is a little short-sighted how the market rallied because, oh my goodness, thank God the socialist isn't going to run for president. His odds were slim. Biden's are a lot better. And I think overall, the market wants Trump rather than Biden. Just food for thought as we go forward. Because this is going to be the big picture, and how you think this is volatile, and it is, we're going to have this a good part through the election. So, as far as today goes, said last night in the video, our prices and destinations are incredibly far apart. So that is, right now, price is trying to seek its level, right? We're up $5. We were up as high as 7, and we still were not at our first upside destination, which was the afternoon rally high, which I told you last night is $8 higher than the close. Right? Price seeking its level. So right now, upside destination 308.26, your afternoon rally high from F period. Then you don't have anything for another $5 to 313.84, yesterday's high, and then 318.11, a daily high. Far and wide before we get more market-generated information. For the downside, we don't have anything until 297.57, which is yesterday's low. Then 294.46 daily low, 292.97 9 wide from the 28th, 288.03 afternoon pullback low, and 285.54 monthly low. Now, we do have our pre-market high, which as of right now is 307.63, so I would use that as the first upside. And as of right now, 304.70 is my pre-market low. I would use that as my first destination. So what's the game plan for this morning? Well, because this range is incredibly huge and the value is incredibly huge, the chop is going to be tremendous in A period, right? And like I've said in the past, especially in these volatile times, there's no harm in letting A period form. But if you do want to take a trade, there's a couple of things you can do. If we ought to rally up close to the afternoon rally high, you can certainly take a put, right? You know you're out. You get accepted above F period, I'm out of the trade. As far as the call play goes, again, look at L&M's high from yesterday and look at where the base of the price probe was from the second. Very similar. 304.07, I believe, was the price probe. 304.24 is L's high. So, if we ought to trade back down to that level, you can take a call play. However, if you get accepted back into L&M's range, I'm out of that trade because the odds are then you're going to go and test possibly yesterday's low. So those are two early trades. Now remember, both those trades, the short and the long, are both in value, in balance. They're the worst of your risk reward. Yes, it's a huge balance. Yes, it's a huge value. I'm curious to see if we can possibly have a trend day either up or down today and still have an inside day. I don't think I've ever seen that before. That'd be pretty cool. But I don't think I've ever seen that. So early on, those are the two trades I would look at this morning. Now again, it's just over an hour to go prior to the opening. By the time we open, we could be trading up here or all the way down here, right? If by some chance we do rally big time above the afternoon rally high, then again, you can look to short. I'd rather short C's high than the day's high. At least with C's high, you have something to lean against with value. If you get accepted into that sell tail, then I'd get out. Same on the downside. If we ought to open back into L&M's range, I don't think I want to be a buyer. I really don't. You get accepted into here, good odds you're going to at least test M's low. So I think I would watch that. So those are early trades for you this morning. And then chart-wise, I'll show all three real quick because important, monthly, right? We got right up to that trend line yesterday on that pop and B period, right? Outside month down. Weekly. Well, you have a huge weekly balance from last week. We're totally inside of it now, 2 days into the week. And then daily. Right now, the daily is the healthiest of them all, right? Because we're in balance. The longer time frames are down, monthly and weekly. We're in balance. It's a 2-day balance. Yesterday's high, the previous day's low. It's a huge balance. We've battled the 200-day moving average now 3 out of the last 4 days. I firmly believe whoever wins this is going to at least have an opportunity. If it's the bulls, you're going to get up, and I think you'll have an opportunity at the 50. If it's the bears, you're going to go back down and test that 287 level. It's still undecided. Good luck trading today. Have a great day, and we'll recap at 4 p.m.